And we're going to jump right in. So if you start putting your hands up, if you've got questions, and we'll go in order. Azad, are you there? We'll give Azad a little bit of time. I think he's going to make sure it's all recording. So you're currently a listener, Azad. You've got to accept the hosting request. Still a listener. Either request to be co-host or accept the request, if you can see that. Okay, so Azad, you're now co-host. Are we all recording okay?
Yeah, we're recording. Can you hear me?
Yeah, awesome. So let's just bring on the first person.
Okay, let's just accept a few people. So who'd like to go first? Let's go with Jimmy Z.
Hey, Simon, can you hear me?
Yeah, hear you well, Jimmy.
Hey, question. I just got through watching the video that you just put out, and I saw the one from yesterday. I just wanted to know, thinking about
Got a bad line, Jimmy. I can't hear.
Can you hear me?
I can now, but it was
Okay.
in and out before.
All right. Hopefully this will stay good. I'm thinking that when you initially put out about moving everything to Bitcoin and ETH, my question is, going forward, have you given what's the thought process to how the staked ETH that's not liquid now, but we know is going to be coming liquid later? How are you thinking about doing that? Because we can't sell that staked ETH initially, but we know going forward we'll be able to. How are you projecting to handle that, say, if it comes available a year from now?
Yeah, that's a really good point. So obviously the things that are in staked ETHs are going to have to stay there. And so really that's the importance of having the ability to have just more than one currency. So if you did it 50-50 Bitcoin and ETH, and we're assuming that stake ETH remains its peg, then obviously those staked ETH, they would have to sit in that custody account. And I think, the community and in any reorg plan can start to think about whether, how to think about those. But eventually they will become ETH. And so that would give an element of lock-in. And so, those would have to stay there until they could become ETH in custody. But you just want to transfer title to those over to a custody account. So that those are your assets and they're not commingled in a bunch of other things.
Okay. And then the other thing is, I know you mentioned converting stable coins as well to Bitcoin and ETH. With people that put stable coins in, like older people that may have been depending on saying, let's just have this as my retirement. Do you foresee any challenges, or do you think there's any downside to some of those folks still having their haircut but keeping a stable coin, or is that going to add just another level of complexity that you think's getting too challenging?
Yeah, if you keep stables in, here's the challenge that I trying to foresee, and this is just my thinking. You may have different thinking. Once you start going around the dollarizing thing, I think you risk getting everything dollarized. I think the community is going to have to vote on we want to be crypto long. The majority that's voting, believe that Bitcoin and ETH is a low risk proxy, politically neutral. Remember that, I don't consider the stablecoin argument as too politically challenging, but there are lots of debates around whether those are securities and various other things as well. So I'm trying to get out of all those debates that could come up that prevent us getting out of Chapter 11. The other reason is just risking being dollarized as well. Once I think they see that option, they'll probably take that option. It also supports the recovery for all. So if we can start thinking about equitable, then that play between being what historically looks like the low in the market. But yeah, if you start going down 3 routes, then here's the problem. You'd have to then probably do 1/3 in order to reach an equitable solution. And then you're going to have to sell a bunch of Bitcoin and ETH at what feels like the bottom of the market for many people, not financial advice.
Right. And then just to backtrack with you again on the staked ETH portion. So if I'm understanding correctly, initially you divide everything to Bitcoin and Ether. And now let's just, to make numbers easy, I'm just throwing a ballpark, say, and that's going to be 50-50 is what you're thinking initially?
That's what I think causes the least politics and the least arguments.
Okay, so then that staked ETH, let's just say, I'm just making up a number for our conversation. Let's say there's 150 or 200,000 staked ETH. You're saying when that, a year from now, let's assume it all of a sudden becomes available, would that staked ETH then be split 50-50 between ETH and the Bitcoin buckets again? Or like, you see what I'm saying? Like, when we have access to that staked ETH down the road, would you keep half of it and the other half sell into Bitcoin to give back to the folks?
No, I think you'd, I mean, these are all good questions, really good questions. So, for the things for the community to think about, I think you just treat stake ETH like ETH, but disclose that it is in stake ETH. All the staking revenue, because it's in custody, is entitled to, this is essentially similar to, I wouldn't call it this, but we created back in the day when Ethereum first launched after the ICO, an Ethereum mining-backed security. So when it was proof of work, people had entitlement to ETH, and we would pay them a daily dividend in ETH, and we paid out millions of those dividends. So those can all be distributed to people's accounts. Maybe you don't want to go daily. You could do weekly to stick in line with what people are used to. But by staking it, because you're entitled to it, it's your asset. Then just treat it as if it were ETH. It would be, one idea, one suggestion there.
Okay, so you're basically saying the amount of ETH that's staked that is illiquid today, you would want to go ahead and count for customers now as part of that split of what you have access to, even though some customers, or all ETH customers, wouldn't have access to all of their ETH until the staked portion freed up. Is that what I'm understanding?
Yeah, so if if it's illiquid, if staked ETH, which it is illiquid, then people would have a percentage of their ETH which is liquid, and then the Bitcoin side would be what they can withdraw because it's not locked or anyway.
All right, thanks.
It's a really interesting point, though. I think the community should really look into the pros and cons there further.
Okay, next speaker, let's bring on Sam.
Hey, Simon, just watched the presentation. Thank you for your time. Wanted to ask you about those that have self-directed IRAs that hold crypto that's in Celsius right now. Would the transition into retirement plan B be an easy one? Because originally I wanted to get into retirement plan B, but there was a wait list. It wasn't quite launched yet. This was probably about a year ago when you were on the AMA with Alex. Wondering where that would be and if that transition would be something that's pretty easy if this plan goes through.
I think it would be eventually, but there's a bunch of stuff that I don't feel comfortable promising at this stage. So we had already done a regulatory analysis on whether an IRA could own retirement plan B, and we already found a provider that could do that. And then we got the legal, tax, and compliance opinions. And then there was a few things we need to actually go through a materiality consultation with FINRA and make sure that they're happy with that process, because it would have to be treated as a security. And then it's most likely that would only be an option for accredited rather than non-accredited. But there's solutions for the future. But off the bat, transitioning from an IRA to a retirement plan B would simply be your IRA opens an account with the new provider, which is something that we can do. if you're accredited. But then there would be a distribution using the bankruptcy codes. Don't take this as legal advice, tax advice, or financial advice, which would allow potentially for a non-accredited distribution. In the future, a retirement plan B could potentially be owned by your IRA. But yeah, there's a bunch of work there until that's available. That's not going to be soon.
All right, thank you.
Thank you. And just for those not familiar, what we're talking about, I don't want to turn this into a shilling thing, but we at Bank to the Future, we have a wealth management program that guides people on how to not get blown up and do a financial plan. And then we have a portfolio builder like the one that I showed on the YouTube video, where people can set up their own retirement plan, which was the partnership with Celsius that we're referring to there.
Okay, let's bring on our regular speaker, Celsius Loans.
Hey, thanks, Simon. Thanks, Azad. Just a quick question or comment just about the Celsius custody in a future investment account. So obviously, I don't know if you're familiar. I know you're a Series B investor in Abra. Abra's just switched from their unaccredited Earn program to now they're an accredited investor with a program called Abra Boost. But that is only right now for deposits for people that are accredited investors. I also think about a company like Gemini. Gemini, you can still earn quote unquote interest or yield on your Bitcoin if you're an unaccredited investor. So just in a NewCo reorg, how do you see accredited investors and unaccredited investors being able to hold crypto in a future investment account? Thank you.
So holding crypto would most likely be done under a custody account. But then if you're in the securities side, it's most likely to be accredited investors until you replicate something like for filing an S1 for an earned product, which would involve the full-blown prospectus in the future. So non-accredited US, I see no issue from the research we've done so far in doing a distribution through Chapter 11, but the products that would be available to you may not be what would be available to everybody else. And that's kind of one of the challenges with this process. But in terms of the loans, I can't foresee an issue. Again, not regulatory legal advice. With the securities, if you're engaging with the US, then you'd want the other side that would be providing the collateral if they're from the US to be accredited. So it's just a matching exercise, given that we've got all these different types of people that could engage in different services. And the platform, once you've been through, for example, once you've been through the security law compliance part, the services that are available is only presented to you. And then, if you've whatever the Abra and Gemini services would be as well.
Okay, thanks. I appreciate it. And then just one recommendation for the rest of the 7-part series. If you could do like you did, where you stream your YouTube video also on Twitter Spaces, just in a listening status, just so you could have more reach. I know a lot of people use Twitter. That'd be helpful. But thanks for the time, and thanks for having me on stage.
Yeah, no worries. As long as you got the feedback, we tried that once, and we got blown up by technology, but I think we made it work somehow.
Okay, let's bring on Dr. Boogie.
Hi, Simon. Thanks for everything you've done up until this point. It's been really encouraging. I just wanted to get some clarity on the question of distribution of BTC and ETH in your plan. I was until recently under the impression, for whatever reason, that because most accounts hold mostly BTC and or ETH, that the distribution of those would be in kind or somehow close to in kind, and that all the other alts would be converted according to their value at the filing date. But it's becoming perhaps clear to me that that BTC and ETH would be distributed according to the entire account value at a filing date, meaning that at some level it would be like if we sold our BTC on 13 July and then bought it back on whenever the conversion date is at whatever rate, a market rate it's at that time, which would be kind of a huge loss for a lot of people, depending on what the markets do. But presumably, this date, the conversion date, is far enough into the future that it could be, the value could be significantly higher.
Yeah, I
could
think
you
this is a
speak to
really
that?
good point. So people have got payment in kind very confused. They think payment in kind means that you end up with you're going to receive all your Bitcoin back, and then other people are confusing it with just pay us in crypto. And so what we saw in the FTX deal is that with bankruptcy code is that they dollarize you at the point of filing the bankruptcy. And so that's why in filling the hole, the only way to fill the hole from my perspective, because I'm a Bitcoin thinker and I think how many Bitcoin did I have and how many Bitcoin am I going to have afterwards and how do I fill that hole? And that's why you've got, the only way to do that is with a high risk, high return, or we've got to actually lock in the loss. And so I'll cover more about that in filling the hole tomorrow. But yeah, essentially what's happening here is bankruptcy code requires everyone to be treated fairly and equitable. And so if we're in, those in the same class need to be treated the same in order to get out of Chapter 11, which would mean that essentially convert everything to Bitcoin and ETH, and everyone has a claim in dollars that they're entitled to. And then you distribute that Bitcoin and ETH evenly across everybody. And by the numbers on the last coin report, that would mean that you'd have 47.6%, I think I gave, and a 50% haircut. And then you start figuring out how to fill that hole, so that eventually, if it goes well, and I'm not saying this will happen, but in the case of Bitfinex, we went from 30 cents on the dollar to $16 on the dollar. And I'm not saying that will happen again because that is really extreme, but that's what happened. Then you have the potential to make up that opportunity cost, which is that you could have been in Bitcoin and ETH, and then also by deploying all the assets as well. And that's why it's tragic to use the normal bidding process from companies that are not going to restructure, where all the assets are utilized for the benefit of creditors, rather than the Voyager situation or something where the value goes to the shareholders of the company that wins the bid. And that's why we just need to be really careful about what we ask for, because there is no bailout. No one's going to fill that hole. Everyone, when I originally tried to do that, they all ended up saying, yeah, but rather than paying $3 billion, I could just buy everything for a few $100 million. And it's the only thing that makes sense, unless you are a fellow creditor and you want to utilize all this structuring to ensure that all the assets are packaged up for the benefit of creditors. And then there's a business that can, rather than benefit from buying all those assets, can just benefit from having a relationship with all those clients and customers. And that's what I tried to present.
Okay, thank you for that. I guess I'm just wondering if there isn't a way to, instead of converting our BTC and ETH according to their dollar value at the date of filing, to returning those coins less the haircut, and then converting everything else. And what you're saying is, it sounds like that's
there's
much
no way
more
to do it in violation. There's no way. So yeah, you could say, right, we've got a bunch of Bitcoin and we're trying to get to 50-50 Bitcoin ETH. If you, so if, for example, you said, let's give everyone whatever Bitcoin's left back to those that have Bitcoin, and whatever ETH is left back to those that have ETH, you'd be in a situation where those that have Bitcoin only end up with a 70% haircut, and those with ETH end up with like a 20% haircut. So you would violate the rules of the bankruptcy code, and everyone would be basically receiving a unequitable haircut based upon the gambling of Celsius's activities, and punishing them for something where they had no control in an unlicensed security.
Yeah. Okay. Thank you.
Okay, thank you, Boo. Let's go with Locks. Can you hear us, Locks?
Hi. Hi, Simon. I just watched your video today, just few minutes ago, and I'm quite impressed with all the, different accounts and options. I'm just wondering, did you have, did you give a thought about using some DeFi strategy? Because in the context of this staked ETH, what Celsius is already having. So there are many DeFi strategy can be applied. So I was just wondering not only about staked ETH, but maybe converting BTC into WBT, wrap BTC, and using some DeFi strategy to make more earning with of course like sound and established DeFi platforms, not anything like whatever Celsius used to do.
Yeah, so what you're referring to is if you want to do that on your own, that's DeFi. If you want a company to do that for you, then it's called a security. And a security is you disclose all of the risks and what they're doing, and make sure that before they invest that they're suitable to invest, and they know what they're investing in and what the risks are of it going wrong. At Bank to the Future, we've created hundreds of securities. We've created, a mining fund. We've created the first Bitcoin private equity. We've created Ethereum-backed securities. The innovation is endless of what you want to do. So if the demand is there for a new security that utilizes DeFi, then you need to create a prospectus and a disclosure statement, so that people know what they're investing in, and then make sure that it's sold to only those that are suitable to invest in it and they understand the risks. So this is a new way of thinking in terms of how to do it in a centralized way, in a compliant way, so that you always know what you're getting into. And so, of course, it's possible. But then if you prefer to do that in a completely decentralized way, then that's you doing it as it was intended, connecting your MetaMask and getting some WBTC, and doing it on your own.
I was referring to the centralized way. Basically, as you know, in your platform, there is another company called Yield App. They are also doing the similar kind of strategy, like using DeFi in the back end. So I was referring to centralized way. I mean, decentralized way, whatever. I mean, self-custodial way, what we are doing, we are already doing. I was referring only centralized way, whatever assets we will have in the new co.
Yeah, so once you have a securities business that is authorized in order to create new securities, then you can get as innovative as you want in putting together those securities, as long as they're disclosed correctly.
Okay, fair enough. Thank you. Thank you for your answer. Thank you. Bye.
Thank you. Let's go with Kelvin. Kelvin, can you hear us?
Yes, I can. I had to turn my mic on. Hello, can you hear me?
Yep.
Got you.
Great. Okay. Yeah, just a quick question to Simon. Simon, in figure out the numbers regarding the whole, you didn't mention anything about clawbacks, and from where I'm sitting, they could be significant.
So clawbacks and funding is going to be video 7. So we're trying to stay on topic.
Got you. Thank you so much.
What we're trying to do is do things slightly different, where rather than we talk round in circles, topic to topic, we just get to the real core issues of one topic, so that people can really figure out what they want. and then move to the next topic so that we actually get to a creditor-led recovery plan crowdsourced by the community.
Great plan. Thank you, sir.
Thank you.
Okay. Next speaker is Richard.
Thanks, Azad. Hi, Simon. I just had a quick question. When I was watching the video, it seemed to me that there was no identification of like what company. So just to give perspective, I am a U.S. earn user in Celsius, but since this is public information, I have about a 6-figure account, which I don't think qualifies me as an accredited investor. So I was curious. First, it seems like just given the regulatory space that my funds would be moved to some sort of custody account. My question is, like, have we identified like where those funds would go? Like what service would we be using? Like what custody account would our funds be transitioned to? Is that what we're still debating? Like, will it be like a completely new entity that comes from Celsius? Is Salt or another company going to be offering like custody services? I think that's what I'm kind of having some confusion understanding.
Yeah, so the bankruptcy process is optimized around taking out all of the problems and putting it into a new company. And so that can happen in a number of ways. Celsius could create a new company and then try and solve all the regulatory issues, but that's looking like they're not submitting a plan and increasingly less likely because a bid process is happening, which is where other companies would come along, attempt to buy the assets and or put together some kind of bid that comes with a reorganization plan. And then if that doesn't go through, then the UCC could decide to do it. From what I'm seeing, is everything is moving towards these having to go to a new home because the number of issues within the company that we invested through just seem to be growing by the day.
Got it. So basically, whoever bids on our assets, like I guess that's what I'm trying to figure out is, you know, I guess maybe I'll save this for the next video because I'm trying to figure out how can someone bid on us and give us a new home while we're also filling the hole with equity if we don't have a home for our custody.
Exactly. If you go to the highest bidder, then you're most likely to get what happened to Voyager, where it dollarizes the haircut. You end up locking in, and then you find a new home. And if you're not happy, you probably end up just leaving as fast as possible, pissed off about the whole process. That's exactly what we're trying to prevent here. We're trying to make sure that rather than the bidder buying all the assets and then their shareholders benefiting from the assets and giving you a crumb, that we end up in a situation where all the assets are used for the benefit of creditors. And that's why we have to have a creditor-led plan. And that's why we're in the process to try and support everybody as I am the 21st largest creditor. And I want to at least have a creditor-led plan that I would at least sign off on. And that's kind of the ideas behind these presentations so that the community can then say, this is what we want. And I believe that we have everything we need within our own community in order to achieve that and get the result that we want, as long as we just play the process correctly and don't get caught with our pants down without knowing what we want because we spent 4 months debating and then someone else decides our future and our destiny. And if they decide, I guarantee you're not going to be happy with the result.
Awesome. Thanks, Simon.
Okay, thank you, Richard. Let's bring on AE. Can you hear us, AE? AE, if you're there. Okay.
Yes, I'm here. Sorry for the delay.
All right. Cool.
So first, I want to say thank you, Simon. So I have about 95% stable coins. The rest with other Bitcoin and Ethereum, and I think your plan is good. And in the spirit of compromise, I'm happy to put the 95% of the stable coins into something that I know will avoid Chapter 7. And also, for other people who hold stable coins, it's really not that. It's actually probably beneficial, given that with the Bitcoin and Ethereum prices having come down. I think you referred to this before. I think it's a good deal all around. My question is, as a U.S. creditor, I'm a accredited investor. How is this going to work for U.S. citizens that we have a non-accredited investors, we have accredited investors, high worth individuals. And so after the initial distribution, how will all this work going forward?
Yeah, so the plan that we're trying to show people that they can tweak is here's how you get access to your assets as fast as possible. Once you have them, and they will be haircut because Celsius doesn't have them all, and because every asset has a different haircut, there needs to be an equitable distribution strategy. And so I proposed what I thought was the best way of knocking all our heads together and having something that seems fair. Now, once you have your funds in custody, means you own them. So there's no ambiguity there. And you then essentially, the company that ends up with these, being able to offer these services, either offers a service that you want, whether it be through lending, whether it be earned through a security, or incentives in order to try and retain you as a customer. But you might decide, no, I'm done, I'm out. And so what I'm trying to put here is that how do you win back trust? How do you create a compelling future? And to me, the number one thing is treat the customers, the creditors well, give them every shot at filling the hole by taking all of the things that could give them a recovery and making it available for them. And then I believe that those customers and investors will be loyal to you for a very long time. Now, if you can't offer all of your services to them for regulatory reasons, then there's no way around that other than getting the appropriate licenses and playing within the confines of the law. And so there are certain services that are available to accredited, non-accredited, high net worth, non-US, US. And we've been massaging and understanding how to do that for over a decade now. And so, that's why everyone is in these individual groups. Because essentially, Celsius offered an unregistered security. Then the state regulator said, you're not allowed to do that. And so they then said, oh, right, we better move these people over to custody. But maybe that wasn't done in substance. So an examiner needs to investigate. And that's why we're all in this unequitable mess where we're all, hiring counsel and not getting any further. Rather than just figuring out what is the optimum plan that we could crowdsource as a community, creditor-led for creditors, in order to get the hell out of Chapter 11, out of this hellhole, and have a compelling future that allows us to actually make this situation a good situation, which is no guarantee, but that's what we did with Bitfinex in the past.
Okay, next speaker is Deep.
Yeah, hi. Can you guys hear me?
Yep.
Okay, great. First of all, I would like to say thank you to Simon. I think you deserve more appreciation than what you're getting. And I think it's very important so that you stay in, highest of the positive energy and keep doing what you're doing for the entire community. I understand nobody else is going to do this for us. So coming to the question, my question is just to keep the numbers easy. Let's say I just have 100 ETH in Celsius and 100 Chainlink, only two coins, just for the ease, 100 ETH and 100 Chainlink. So I understand that you initially want to give 50%. So let's say for 100 ETH, I get 50 ETH. in custody, and 50 ETH goes as the equity. And the chain link that I have, you will be selling it OTC and then converting that chain link into either ETH or BTC. Is that correct?
Not quite, and thank you for putting the numbers to it. Because if you're confused, then so will others be. And I really need to get better at describing it. And you've given me some really good ideas. So in your scenario, where you have 100 ETH and 100 Chainlink, you would end up with probably 25. God, trying to get the numbers right. So we'd have to dollarize that there. So you'd end up with half
25
of the.
ETH, 25 ETH and 25 ETH worth of BTC. Is that what you want to say?
There you go. Yeah, there you go.
Okay.
Yeah.
Okay, so
That's what
even
you.
if I don't have BTC in my account, okay, if you give, if anybody gets like that and they don't like it, they can always trade or swap it to whichever token they want. So I get your point.
Yeah, the goal
So,
is just to have the lowest risk
okay.
crypto long you could possibly have that creates as least challenges from regulators so that we can get out of this as fast as possible without all the politics.
I think the challenge it will be equal even if even if the person is given back 50 ETH because he was not invested in BTC, and I understand ETH is like 80%, but still I'm getting 50 ETH, so it is in the same currency. I feel it will be easier, but anyways, that doesn't
It's
make
too
much
hard.
difference.
It's so hard. Like you could try and do that, but even
Okay,
just getting there across every account. I mean, yeah, I'm not.
okay.
I'm
And what
not
about the
open to it, but then you've got to
so
make sure that you've got enough ETH and enough Bitcoin for each one in a moving price environment,
yes.
and trying to treat everyone equitable when everything is changing on a constantly moving. But if you just know, here's how many Bitcoin we have and here's how many ETH we have, and we know everyone's pro rata share, let's share it with everybody.
Okay. And what about the chain link? So the 50 worth of chain link will be divided 25 worth of ETH and 25 worth of BTC, correct?
Yeah, so the 100 chain link would have been pulled together with everyone else's chain link, and OTC trades would occur, and that would contribute to the total amount of Bitcoin and ETH that you get to share with everyone. And
Okay.
then you've just got your pro rata share, based upon the price at bankruptcy.
With the amount of chain link that is okay, understood, understood. And sir, I think people are also confused about this part, which I want to clarify, that the sell token, which is in the app, only in the app, will be converted at the price of the day of the bankruptcy. Is that right?
It won't be converted. No, you'll just actually get
Okay.
your pro rata share of the Bitcoin and ETH would just be based upon
The,
the
the sell
price
token
at
price.
bankruptcy, but no
Okay.
coin
And
would be converted. They'll just be burnt.
yes, okay, understood. And the all the other coins, all the other 60 coins, for example, Dot, Chainlink, Matic, whatever, they will be changed in OTC at the current date, not at the date of filing the bankruptcy. Is that right?
Well, yeah. So if this gets signed off as a plan, then all of those tokens would be traded over the counter into Bitcoin and ETH to try and get as close to 50% Bitcoin and 50% ETH in dollar value at the time as possible.
At the time of the conversion.
At
Okay.
the time of conversion, but your pro rata entitlement to them is based upon the price at the time of bankruptcy, which is in line with the bankruptcy code. It's non-negotiable.
I did not get the last point, sir. So OTC trade will be done at the current prices, but the
Yeah, so
pro rata
there
share.
will be, so you'll trade and you'll try and get Bitcoin and ETH, and then there will
Okay.
be a massive pool of Bitcoin and ETH. How
Okay.
do you divvy that up? You divvy that up based upon exactly what you see when you go to that website where it says you owe me $10 million. So let's say there's the entire pool is $6.9 billion, and you're
Okay.
entitled to $10 million because that was calculated based upon the price at the time of bankruptcy. That
Okay.
gives you a percentage of that Bitcoin and ETH that you are entitled to.
Okay. So
Okay.
basically, the value on the date of bankruptcy, that is the one we will get even after,
That determines what percentage of the pool you get. And it's currently being used that way right now. When people are looking at, what is my claim, this has all been calculated already. It's based upon the price at the point of bankruptcy. Now, whether you get paid in Bitcoin or ETH is just your pro rata share in those Bitcoin and ETH.
Okay, we've got a few more people requesting, so just trying to keep it as short as possible with the questions. Great questions there from Deep. Thank you. Michael, can we have one question for Simon? We've just got 12 minutes remaining.
Great. Thank you very much. And thank you very much, Simon, for hosting these Twitter Space discussions. So I listened to your proposal yesterday, and I didn't hear any discussion about stablecoins. And perhaps you've touched on this and I missed it, so I apologize if I did. But it confuses me as to why you've selected Bitcoin and Ethereum as the only assets that would be surviving.
Yeah, we already covered that one.
You've already covered stablecoin. Yeah, please go ahead.
So if you watch the video today and watch this recording, we covered that one in depth.
So can you summarize just very quickly so that I'm on the same page?
Yeah, so if you wanted to do 1/3 stable, 1/3 Bitcoin, 1/3 ETH, then a bunch of people are going to have to sell their Bitcoin and ETH at what they think is the bottom of the market. And I don't think that's going to get the political vote you need in order to get the optimum number of people agreeing on this. My fear is that once you do that, the court will then just go for, let's just dollarize everything rather than dollarize 1/3. And that's what I think it will end up in the outcome that none of us wanted. And then you won't get the vote, and then we start again.
Okay,
that's just my opinion.
Let's bring on BitShack.
Good day, folks. Thanks for bringing me up. Aside with regards to the dust type values, have you established a minimum viable amount to process, and have you got a figure on what you see as dust on the system?
So, for example, if you're asking that question of how we do it at our business right now, we have to charge like a $25 withdrawal fee. And that would, anything below that just couldn't be withdrawn is what we use on our platform.
Okay, cool. So basically then we would have to look at something like that. Because at some point it's just not feasible to deal with an account on an individual basis. So
yeah, I mean, so we're gonna have to reach consensus on that. But
okay, so that is,
once you hit below $25, you normally it's not even worth withdrawing because it doesn't cover a centralized platform's withdrawal fee normally.
Yeah, and then just the next question would be, what is Bank to the Future's charges look like with regards to all these services that would be offered to the client base?
Well, that would be on, if we put together a full recovery plan, that would be in there. But if you go to the pricing section on Bank to the Future, then all our prices are listed there.
Okay, so it's pretty much in line with what your current business is running on.
Well, yeah, I mean, if we end up offering all these services to everybody, then we'd obviously be looking at, there's a video that we're going to be doing, I think it's number 5, on putting together a compelling future. We got to, I think there'll be a market for incentivizing people to want to stay. And price is one of those mechanisms that you could use.
Okay, question. Next speaker, Daylong, please. Elon, can you hear
Hi,
us?
hi. Yes, hi. Good afternoon. Can you hear me?
Yep.
Okay, great. Very quickly, Simon, thanks again for everything you do, and you too, Mr. Islam. If ever, very quick, if ever, for example, buys a loan book and it gets past, there's nothing we could do about it, that would actually be a very good thing for me, I would argue. But I also don't want to screw over other people. Is earning custody screwed if that happens? And my second very quick question is, and I'm dating myself, you're going to know I come from the 70s. Why isn't a leverage buyout being talked about, since there is tremendous value in these assets and all we need is time? So those are my two questions. I'm sure there's a very good answer for the second one. I just don't know it. Thank you.
Yeah, so the first one is, yeah, I mean, this can be bid off in parts. I think it's preferable for everything to go in one place, but if it goes in parts, then it goes in parts. And then you've got a debate between the value of the collateral and then how you compensate another seller. It's immensely complicated. So if you sold off just that one as an asset, there simultaneously have to be a negotiation on how it affects somebody else's purchase. And then there'd be a negotiation around how the client is treated, how the custody is treated, how the collateral is treated. And so I've been around this in so many circles now that I just came to the conclusion that we need to figure out how to do it together with one entity that can offer all the services, that commits to doing everything for creditors by creditors. And that's just my natural conclusion. But if the bidding process and everybody else can come up with a way of simultaneously meeting the needs of multiple bidders and separating all the assets, you're a better person than me. I've tried. And then in terms of a leveraged buyout, yeah, I mean, the challenge here, and we're going a bit more into the next topic. I'm going to save that for the next topic. That would be something worth asking during the whole filling the hole strategy. You could fill the hole with a leveraged buyout. That would be one approach.
The next speaker is Lawrence. Lawrence, can you hear us? Okay, let's move over.
I hear you.
Yep, we can
Good
hear
afternoon. Just very quick points. I think we've come a long way, Simon, in the ETH and Bitcoin distribution only and the reasoning for it. And I think we've come a long way with the custody and the earned accounts. And I think we've come quite a way with the loans accounts and your solutions. My suggestion, since I only see about 50 people on this Twitter feed daily, is a comparison chart like you were buying a car. And you seem to have tremendous following on the YouTube after. On each slide, maybe a comparison between Bank to the Future, et cetera, et cetera. And your thoughts?
Yeah, fantastic idea. I do think that the UCC and Celsius and the investment banks that we're currently paying with our money in order to do that work should do that work. But yeah, let's get out a community-led recovery plan. And then maybe within the community, someone wants to take up that work as well. The sheer number of work is what my goal was to just give you a video series where you have the information and the ability to debate and figure out what you want. And then hopefully the community can take that into a structure that leads to one creditor-led recovery plan, so that then you don't get caught off guard when the investment banks end up doing something that's completely against your will with no real comprehension of why it's happening and how it happened. So I think that's a really great suggestion. And I think once the community has hit, this is what we want, then I think it can then lead into who do we want to do it, and can they do it with a comparison of whether they have, based upon some of the things that I outlined here, because I now think if you go back through this, you have the tools to analyze and make those a better information, I think.
Okay, next speaker, Eric. Hello, Eric, can you hear us? Okay, let's move to Johan. Hello, Johan, can you hear us?
Hello, I can hear you.
Okay, we
can you hear
now.
me?
Yep.
Yeah. Okay.
Your question, please.
Yeah. Thank you for holding the spaces. I think your plan has a lot of merit. However, there's some glaring problems with it, and it has to do with property rights, which I discussed with you before. Now, I hear you talk about the custody account in the new entity, where you want to move assets because they will be owned by the custody holder. Now, why wouldn't you respect that in the present setup? Same for loan collateral. Those are not part of the estate and should not be treated the same way. An equitable solution doesn't mean that everybody is treated the same. It means that everybody in the same asset class, in the similar positions, are treated the same. And what you're actually doing, in my view, is that you are stealing from property that is not the estate by haircutting collateral and custody.
Yeah, I really respect that, and really the only intention of this is because I've spoken to every constituency, been round in circles, and I think that if we follow that path, we end up with the worst result for everybody. And I've been through the game theory, I've been through the prisoner's dilemma, and I think by us not ad hoc groups not negotiating with each other on what a reasonable settlement is, and either that could be done by a security or something like that. We're all going to end up with the worst result that all of us want. And the other reason is the examiner's doing a report, and the examiner will probably reveal that it was done by terms and conditions through a bait and switch, but the substance probably didn't match. Because pretty much everything felt like it was invested in earn anyway, whether it was custody or whether it was collateral. And there was just no substance to the way it was set up. And so I'm not here to judge that. I think that's what's happened. The examiner will confirm whether that's happened. But, just by terms and conditions and the fact that, for example, so Celsius sold an unregistered security, regulators say cease and desist, then a bunch of customers say, "Oh, right, in order to solve this regulatory issue, I'll go to custody." And then they fight and go crazy at Celsius for not offering them earn service. And then there's a bunch of shenanigans 89 days before the bankruptcy, which happened to deal with a 90-day preference. I just smell a rat in the whole thing. And I think that the examiner's going to find a bunch of stuff that probably no one likes. And I think it's going to cause delay if we can't come up with our own solution. I think it's going to cause division. I think it's going to cause hate. And I think it's going to lead to a worse result for all. That's just simply why I came up with this, because we got to if it is your property, I don't want your property. But I think everyone thought, everybody thought they had something different to what they had ended up having. And so how do we get over that challenge? And there's probably two models. It's where the ad hoc groups negotiate with each other and figure out a security that's a win-win-win for all. Or we end up playing Kirkland's game. Kirkland and Ellis win. And also, there are also very valid things that you might want to know about the tax side. And then people might bait and switch their plan based upon pursuing self-interest. What I really tried to do was get this conversation around what is the best result for all of us. And if we can get there, mission impossible, then we might be able to do something really special that gets a great results. For example, in the Bitfinex side, we were able to get that best result because, people were able to just all be treated the same. And when they were treated the same, a structure was to be able to move forward swiftly. It was able to be executed. and everyone that got what they want, but not exactly what they want, and in the end, it was just a success story. So I'm just trying to get us there. And if we go through the old stories, we'll do another 4 months of this, and we may end up in chapter 7 when we all start firing lawsuits, and then they find more things that we don't like. And as they find more things that we don't like, we end up punished for the actions of others. That's what I just want to avoid. I want the hell out of chapter 11, and I want us to unify around, we're all in this together. We all had different amounts on the platform, but really we all got treated in a way that we don't want to be treated. So how the hell do we get out of this together? We'll do one more question.
Yeah, one more question. We'll take it from Michael Roberts.
Hi, Simon, thank you very much for your leadership. Really appreciate it. Just a question around the word you've used multiple times. I think it's crowdfunding. Is there a financial implication to that, such as potentially the need to invest additional dollars or a percentage of what we ultimately receive in order to fund new activities or activities associated with the new company?
Yeah, I actually said crowdsourcing. And crowdsourcing is where we use our collective intelligence as a common unit of people that are all in the same problem, that all have different skills, and we bring those skills together in order to get the outcome that we want. Crowdfunding is where we all put money together in order to receive a reward. Equity crowdfunding, which is an industry we created in 2009 and in the US in 2012, is where you pull together smaller amounts of money. And so in the very last video, we'll be doing one on clawbacks and funding. But it's a challenge. It's a vehicle that could be used, and it may help. But also it's very hard to fit it in with the restrictions of the bankruptcy process to get things done in time as well. But yeah, if there was a funding round, then that would involve people voluntarily investing if they found something that they wanted to invest into. That's not what I'm saying here. I was saying crowdsourcing.
Okay, very good. Thank you.
Awesome. Okay. All right, everybody. So I hope that from video 1, we've now got an understanding of what do we want, what's important to us, and what's important to other people in terms of how these funds actually get distributed. I've tried to help you understand the political agendas, the regulatory agendas, some of the legal challenges, not being a lawyer myself. There are tax implications. This is an immensely complex problem. And if we can unify around equality, then I believe that we're going to be able to get the best result we could possibly get. And at the end of the day, we need 50% of creditors by number to vote and agree on a plan, whatever the community comes up with through whichever mechanism. Or it's going to be 2/3 of the whales. And the whales are approximately, the data's been coming out, approximately 50 people that if you don't simultaneously meet their needs, then we're not going to get the vote, and we're going to end up with the worst. We could end up with the worst plan, and we could end up with someone else's agenda. And so, what I tried to share with today is the importance in understanding the difference between custody and investment accounts in a company moving forward, and what types of challenges and services would a company that's able to take and give everybody a home, what they would look like on the regulatory side, on the service side. And I'm hoping to impress upon you that we have everything that we need as a community. Celsius have not implemented or submitted their reorg plan yet. Maybe it will come, but so far the leaks have said that they're going to go for exempt from regulations. All my experience tells me that that's not going to work, which is going to drive the bidding process. If we do the bidding process, then either we're going to get bought by a company that's going to implement our plan, or they're just going to take all of our assets and they're going to benefit from it, or a bunch of bidders are all going to fight together, and then we've got all these issues that we're fighting over, because some will say this is my property, some will say that's not my property. We have mission impossible to achieve. And I'm trying to, with these video series, get us closer. We've done 2 video series. We have 5 more. Join me at the same time on YouTube tomorrow, where we'll be covering if I were engaged in order to run this process, or if I were on the UCC, how I would fill the hole. And then you can take that away. Bitshank has got some steering groups. Here's my challenge to you. If all you can do is talk and bring interesting questions, I understand it. But if you really want to get a result, bring what you've got to the table. There is a diverse need of reaching, the creditors that we're not speaking to, whether it's funding, structuring, legal, tax. Just bring what you got to the table, participate in the process, because I do believe that we are actually going to make history here if we can coordinate and get and think about what the negotiations are, what's non-negotiable for you, where you sit, and how we get there. So as I always end on a positive note, always remember you're alive at the most interesting and exciting time in financial history. I was born to do this shit. This really does excite me, but at the same time, I feel a real sense of urgency because I've seen suffering that I really don't like, and I've seen actions that I really don't like, and I want to make sure that everybody ends this, if I can, with every ounce of energy that I've got, to try and do the best we can do to get on the right side of change, so that in a few years' time, we can celebrate at the end and we can look back at this story as it was told in financial history, as one of the things that was actually the best moments in our life. As painful as it is today, we need to get there. We're in control of our destiny. Let's do this together. Let's get this shit done.